The information presented on this program is provided for informational purposes only, without warranty of accuracy, completeness, or suitability for a particular purpose. This program is not intended to be and does not constitute financial, investment, legal, or tax advice. This information is general in nature and not specific enough to be construed as advice. You should not make any decision based on the information presented on this program without independent consultation with an appropriately licensed professional or competent advisor. Investment in securities or the market involves a potential risk for loss of principal. Trading, therefore, may not be suitable for all listeners. Annuity guarantees are based solely on the financial strength and claims paying ability of the issuing company. Withdrawals of growth from annuities may be taxable as ordinary income in the year it is taken. Individuals should review contracts for specific details of the product's features and costs.
For millions of Americans who retire every year, the task of ensuring that your money is working hard enough to provide you with a consistent paycheck can make the job of working for that paycheck seem easy. Retirement doesn't signal the end of financial worry. In fact, for the majority of retirees, it's just the beginning. The assets you have built must be able to provide you and your family with financial security for all the years to come. That's why you need a game plan for retirement, making sure you have a plan and that your money is working hard to provide you with an income you can depend on. This is your game plan for retirement.
And welcome into a special Labor Day weekend edition of Your Game Plan for Retirement. And as we take this weekend and special occasion to celebrate the worker and think about that day off that we get, we want to remember that the biggest celebration of the worker might just be retirement. And Your Game Plan for Retirement is helping us achieve the goals that we find important for that retirement phase of our financial lives. And the man with the information that's going to help us do that is the president and founder of ASC Financial Group across the Lehigh Valley and the Poconos, your local resource for a retirement built to last, and your local income allocation advisor. He is Ralph Grauso. Ralph, welcome back to Your Game Plan for Retirement.
As always, Peter, it's good to be with you again this morning.
Well, it's a pleasure having you on the program, sir. And I know that we have talked about a number of different risks that retirees and pre-retirees are exposed to as they are preparing or nearing retirement time. And I thought we would hit on a couple of those again today, Ralph. Retirement these days is seeming to be a more difficult challenge to adequately prepare for than ever before. And one of the factors that we have to consider when making the transition from our working career to retirement is that we are going to begin to be responsible for creating our own taxable income. And we have to consider the tax ramifications of how we've saved our money, don't we?
Yeah, we absolutely do. Taxes have a huge impact on what happens short-term and long-term. Not to mention that tax planning has to be flexible because we know that what our current tax code is right now could very well be changed in the future. So we have to be able to adjust our plan to address that issue.
When you talk about tax planning, Ralph, I think a lot of people basically do their tax planning on or right before April 15th, and that's the only time that they really think about it. But when it comes right down to it, we are doing tax planning each and every time we put $1 away and save it for the future, aren't we?
There's always consequences, Peter, to the actions we do with our money, particularly in the area of accumulating money and then when we're distributing money. That's going to have a huge impact on how our tax planning goes and how our taxes are paid or affected by how we invest and how we withdraw. And
Ralph, you've talked about these three buckets of money, the after-tax money, the tax-deferred money, and the tax-free money. Are you seeing that people are taking advantage of all three buckets?
You know what, Peter? Most of the folks that we meet with take advantage of the first two, the taxable and the tax-deferred. And, obviously tax-deferred type investing is better than a taxable investing in a lot of respects. But the third, tax-free, we see very little of. And tax-free investing is better than the other two because if tax rates go up and my money is coming out tax-free, it really doesn't matter. And so we really need to be shifting, particularly as we get close to retirement, or if we're already in retirement, we need to be shifting our assets more to a tax-free basis than even a tax deferred.
Well, folks, if taxes are of concern for you, if you have saved your retirement savings in tax-deferred methods and want to look at ways that you can minimize or eliminate any unnecessary taxes throughout your retirement, that's going to add more money to your bottom line. It's allowing you to keep more of your hard-earned money. You need to talk with the team at ASC Financial Group because that is a component of their planning for retirement and the job that they will help you accomplish in pursuing your retirement goals. If you would like to speak with them on a complimentary, no-obligation basis, I want to remind you that they do make their time available to you across the Lehigh Valley and the Poconos. ASC Financial Group, a retirement built to last. Ralph and Josiah Grauso and the rest of the team will sit with you on a complimentary, no-obligation basis to help you review and evaluate your plans. All you have to do is pick up the phone and give a call, 800-939-8633. Again, that number, 800-939-8633. Ralph, you've spoken before about the seed and the harvest concept. Can you tell us again about this seed and harvest and what we need to realize about the way that we are planting our money to harvest it in the future?
Yeah, sure, Peter. So, I like to use illustrations. I like to use stories. I think, we can take a complicated subject and make it a lot simpler by illustration. And so when we look at how our money grows, if I'm a farmer and I have seed, I'm going to plant that seed and I'm hoping for a harvest. That harvest is going to be a multiplier of the seed that I've planted. And if I have a choice between paying the tax on the seed only or on the harvest, which would I'd rather do? Well, obviously, I'd rather just pay the tax on the seed. But what we find many investors doing is paying tax on the harvest, and that creates a problem in retirement.
Well, Ralph, you've mentioned that the third bucket, that tax-free bucket, that would be when you pay the tax on the seed and therefore the harvest is tax-free. Why is it, in your opinion, that you are seeing so many people ignoring this bucket or at least not taking advantage of it?
Well, I think there's not a whole lot of education out there. That would be one reason. I think the second reason would be the fact that people are ingrained to thinking traditional methods of accumulating money through a traditional 401k or IRA, these have been around for years. And so they're kind of lulled into thinking that, I'm putting money away for retirement and I get a tax deduction along the way. And that's great, except that if I pay that tax in a lower bracket to only wind up in a higher bracket later on because tax rates went up, when that money comes out, I'm actually taxed at a higher bracket. It actually has a significant effect on the amount of money that I'm drawing out.
Well, Ralph, I like to give stories and analogies as well. I think that's a great way to illustrate difficult concepts. And I'm trying to think here of any other place in our lives that we experience this same kind of tax break, this deduction when we put money away. Because when we put money away in our 401k, we save a little bit today because we don't have to pay the tax on that money. But when we get to retirement, we are a partner with Uncle Sam. They are part of our account, and we have an unfunded, unknown liability to Uncle Sam to pay the tax debt that we have been delaying. The place that I see a comparison here is in home ownership. When we accept the mortgage deduction for the interest that we have paid on our home loan, it's not like the government becomes a partner with us in that account. But let's say they did. Let's say that every time we took that mortgage interest house deduction on our taxes, the government owned a little bit more and a little bit more and a little bit more of our house. And by the time we had our home paid off, we no longer owed the bank, but instead, because we took that deduction, we owed the government part of our home. They owned part of our home. Do you think a lot of people would take that deduction if that were the case?
Yeah, absolutely not. And I think what our listeners need to understand is that when you have a traditional IRA or a traditional 401k, you are in partnership with the United States government. And right now, that government is $20 trillion is the latest figure, $20 trillion in debt. So you're in partners with an entity that has enormous debt, that is proving that they really don't know how to manage money, and they're the only ones that can change the partnership rules. So right now, you might be in a situation where the partner, the government, is taking 30% and you keep 70%, but they can certainly change that. And with a growing deficit of what we have right now of $20 trillion, the likelihood of them changing that percentage arrangement is pretty significant and pretty obvious to the fact that that will probably take place. And we will see higher tax rates and brackets in the future.
Well, if tax rates have come down since the 80s or 70s, then maybe some of the savers who deferred and delayed paying taxes at that point in time to take the money out today because taxes are lower today made a good deal. But with low taxes today and the possibility of them increasing into the future, Ralph, it's going to be important for people to consider their tax planning, maybe realizing some of that tax liability today, or especially with the ongoing savings that people are doing, considering carefully whether or not they're actually going to realize a savings by not paying that tax today when they're earning a paycheck with which to pay it rather than out of their nest egg once they retire.
You know, we teach a class at Northampton Community College, retirement class. One's geared for post-retirees, folks that have been retired now. And then we do another class for pre, usually 5 to 10 years out. And in both curriculums, both courses, we spend a great deal of time at looking at taxes and how they affect the growth of our money and how they affect the distribution of our money. And tax planning becomes critical to sound financial planning and becomes critical in having a retirement that's built to last.
Well, the implications of the way that you save, folks, are going to affect your outcome in retirement. You need to be aware of your options and consider them carefully, and the team from ASC Financial Group can help you with those considerations. Again, if you would like to sit down with them for a complimentary review and evaluation to talk about your ongoing savings or even strategies to minimize the amount of taxes that you will have to pay out of your current nest egg, give them a call, 800-939-8633. Again, that number, 800-939-8633. They'll run through that scenario as well as a risk analysis, help you evaluate and review how much you are paying in fees for your investments, and if you are getting ready to or already in retirement, they'll help you design your income allocation for retirement. Make sure you're maximizing Social Securities or pensions or other forms of available income so that you have to utilize as little as is necessary from your own personal savings to create your standard of living and the income that you need in retirement. Those are all just different benefits that you can realize from having a sit-down meeting, a financial review and evaluation with the team from ASC Financial Group, a retirement built to last. Ralph and Josiah Grauso are your local income allocation coaches. You can take them up on that offer by calling 800-939-8633. Again, that number, 800-939-8633. And in fact, Ralph, you have some of those classes upcoming here in the next couple months, don't you?
Actually, in the next couple of weeks, Peter, we have a class that will be starting the third week of August, third and fourth week of August, and then we have several of them starting up in September. And again, all our listeners need to do is call that number, and we'll get them the information as to the exact dates and times, the locations. We teach it at Northampton Community College in both the Bethlehem campus for the Lehigh Valley listeners, and then up in the Poconos at our Tannersville campus, Monroe County campus, for the Pocono listeners. And again, all they need to do is call that 1-800-939-8633, and we'd be happy to get them all the information and what's involved with the course. And this is done through the college itself, through their adult education curriculum. And we've gotten some tremendous positive feedback on the course being a very valuable tool to both pre-retirees and those already retired in analyzing and making decisions about their retirement.
Well, informed people make better decisions, and folks, those classes, great way for you to become better informed about your financial choices and decisions that you will have to make in order to maintain your standard of living and create the income that you need throughout retirement. Make sure that you have the financial tools to achieve the goals that you find important. Give Ralph and Josiah Grauso and ASC Financial Group a call to find out more about those classes, or again, to take them up on the opportunity for an individual financial review and evaluation. 800-939-8633 is the number to call. Or if you're tech savvy, you can just text ASC to 555-888 and you'll receive a link back that will allow you to learn a little bit more. Again, just text ASC to 555-888 or give them a call at 800-939-8633. That's 800-939-8633. Now, Ralph, when we're talking about this decision to defer and delay paying taxes or have tax-free income in retirement, a lot of times we're limited by the choices and options that are provided to us in our 401k, which is a great way to save because it's out of sight, it's out of mind, it's done automatically. We know we're making at least certain amounts of efforts toward progress. But more and more, we're finding that those limitations within the 401k sometimes are not going to be the best option for us to make the financial progress that we want to make.
Well, not only that, Peter, but there's not a whole lot of education that's taking place with the employee as to what are the best options for them to pick. Some 401k options we've seen, they give you so many choices, it's kind of overwhelming to know, well, what's the right option for me? And then some of them are very limited in what they look at. And what I have found, Peter, is that many people make decisions based on the performance of that account in the past. And we have to understand, past performance is no indicator of future results. And number two, typically the higher returns, higher risk comes along with it. And so there needs to be the education taking place that is not there with most 401k plans.
But you and your team at ASC Financial Group, you take pride in the fact that you can help educate people about their choices and options within that 401k, don't you?
Well, Peter, we do that every day. Every day. If you're listening to us right now and you have a 401k, I want to encourage you to give us a call. Every day we sit down with people, review their options of their 401k, and give them advice based on their risk tolerance. And we all have different risk tolerances. And we put them through a 3-step process to evaluate their risk tolerance, especially with a couple, because normally the husband may be a little bit more of a gambler than the wife. But there's always going to be two risk tolerance scenarios, and we need to bring that together so that they're making the right choices in how they accumulate that money in the 401k.
And Ralph, as you are helping people review and evaluate their 401ks, are you sometimes finding that there are options available that people are not even aware of? For instance, the ability to maybe save money in the 401k and have tax-free income in the future?
Absolutely, Peter. There's many, many times when we meet with folks, they're not realizing that all of the options. I'll give you a case in particular where we sat down with a person and, we called their plan administrator because, knowing what questions to ask is so important. And what the employee didn't realize was that he wasn't taking full advantage of the match. And, when you get a match on your 401k, that's free money. And they didn't even realize, they thought they were maxing that out, but they could contribute more and obviously get more of a match involved. So we were able to help in that regard.
And there are also some opportunities along the way that sometimes people aren't aware of to take more control of the money inside of their 401ks, yet still continue to take advantage of that match on an ongoing basis. Correct, Ralph?
Yeah, there's definitely, depending on situations out there, there are ways that folks can maximize their 401k contributions and the way they invest that money, even when it's outside of a 401k, but still keep the plan intact.
Well, and again, that sometimes has certain trigger events. That, for instance, Ralph, if you've left a company, I know that's one example of when you could actually take control of an older 401k. What are some of the other trigger events that people might want to keep in mind for when they have the opportunity to take more control of their money? Because control, I think, is something that is a big issue. People want to have control, but inside that 401k, it's kind of limited.
One of the ways, Peter, is when a person reaches age 59 and a half, they're still working, they're still contributing to their 401k, they can do what's called an in-service rollover, where they can take those funds and roll them out into their own individual IRA, thereby controlling it, on how it's invested and still keeping the plan intact. So that would be another way, and we do a lot of that with folks that come to see us, these in-service rollovers. And then as you just mentioned, people will change jobs, change companies, and they leave their other 401k there sitting with their old company, and it's not really any attention is really being paid to it. They have the option to do the same thing.
And Ralph, by taking control of those 401k funds, whether it's an old 401k, an old job, previous employer, or you have reached the age of 59 and a half, by taking the steps to gain control of that asset, people can oftentimes make sure that they are making better progress or are more prepared for retirement when that's coming up in several years, correct?
You know, Peter, in almost every situation, when you control how your money is accumulating, you're going to have more control outside of a 401k plan with your own individual IRA than inside of the 401k plan. So we always have to take a look at that option.
Well, folks, if you would like to take a look at controlling your finances and your assets to make sure that they are working just as hard as you are to prepare you and to make progress toward retirement, pick up the phone, give a call to the team from ASC Financial Group. They will help you review and evaluate the options within your plan, make sure you're capturing all of the free money on the table, make sure that you are appropriately evaluating the tax ramifications, the future liabilities that you may have from the method that you're saving, and show you how to, where possible, morally, legally, and ethically reduce the taxes that you may be liable for into the future. And they will also show you different ways that you can gain more control over those funds and maybe have better growth or more safety. It depends on your goals. Depending on your situation, they will help review and assess the options that are available to you. Pick up the phone and give them a call, 800-939-8633. Again, that number, 800-939-8633. And Ralph, speaking of that element of control, we really only have a short time period from 59 and a half to 70 and a half where we do have discretionary control over those funds, because whether or not we don't have a plan, or maybe our plan is to preserve that asset and we don't need to use what's in our IRA, it doesn't matter, because if you have deferred and delayed paying taxes, the IRS has a plan for you, and it's going to kick in at 70 and a half.
It's called required minimum distribution, Peter. And at that point, regardless of whether you need the money or not, you are now going to be forced to take money out of your retirement plan. And in most cases, that, again, when we went back to talking about tax planning, that could make a significant impact on the taxes we pay, because as that money comes out, not only could it put us in a higher tax bracket, it also could affect the taxes on our Social Security. And so that has to be taken a real good look at to see how those withdrawals affect us overall in our tax situation.
Ralph, I think that you may have just hit on a point that not a lot of people are aware of. Can you talk to us about this implication that our withdrawals from our 401ks and IRAs, how that may negatively affect the amount that we receive from Social Security?
Well, our folks out there have to understand that when Social Security was first enacted, that law basically said, and the government basically said, you will never be taxed on this money. And what happened is, like usual, the government changed the rules. And back actually in Reagan's administration, they legislated a law change that said, if you make too much money, 50% of your Social Security is going to be subject to taxes, ordinary income tax. And then in 1993, under Clinton's administration, they upped that 50% to a maximum of 85% of your Social Security payment would be subject to ordinary income tax if you make too much money.
Now, Ralph, that's not saying that we're losing 85% of our benefit. It's just that 85% is included in our taxable income, correct?
Correct, Peter. You're still going to get the same benefit. You're just going to have to wind up paying taxes on that benefit up to 85% of the benefit. So if my monthly Social Security payment's $1,000, $850 of it could be subject to ordinary income tax.
And that's as a direct effect of the amount of income we are creating from other sources, such as those tax-deferred dollars in our 401ks and IRAs. And that's why tax planning is going to be so vitally important.
Absolutely, Peter. And not only are they looking at those other sources, they're also going to include half of your Social Security in that calculation. So for many, many people, if they're not paying tax on their Social Security, by the time they're 70 and a half, typically when they are required to take those distributions from their IRA or 401k, it now creates that taxable event on their Social Security or increases that taxable event on their Social Security. So we do an analysis, we call it a what-if analysis, that basically says, what if I didn't have this income coming in? How can I save on taxes? And in many cases, we can reduce those taxes. In some cases, there's nothing we can do, but in many cases, we can significantly reduce the overall taxes.
Well, Ralph, you've given us a lot to think about today as far as the tax consequences of the way that we are saving and preparing for retirement. And what I draw as a conclusion from this is that without some sort of proactive tax planning and thought through process on how we are saving, we are leaving the door open to changes in that situation, changes in the tax code, which could amount to essentially more confiscation of the wealth that we have been able to save for our retirement, therefore leaving us less money in retirement. And again, I know this is something that you help folks talk through, think through, and devise a plan, formulate a game plan for how to handle these. Would you describe for us, I know this is just one aspect of the planning, what are maybe some of the top other 2 or 3 measurable benefits that people would realize from coming in and having a discussion with you and the team from ASC Financial Group?
Well, besides the actual tax planning implications, we also need to take a look at risk exposure. So during that planning process, we analyze their risk exposure that they're currently taking, and we normally find that their feelings don't match their behavior. And then secondly is analyzing the fees associated with their current plan and how that is affecting their overall retirement strategy. And so those are the 3 components. The tax planning component is one, but we also need to look at the risk exposure and also what fees are being assessed.
Well, folks, by understanding your tax liability, your risk exposure, and the fees that you are paying, you have better control over that. You can make better decisions about those, and ultimately, you can most likely keep more money in your pocket and in your accounts working harder for you. So that's why the team at ASC Financial Group makes their time available to you on a complimentary, no-obligation basis, and why I encourage you to give them a call and take them up on that offer. They do so free of charge for the residents in and around Allentown, the Poconos, Lehigh Valley. They are your local income allocation coaches, and to take them up on that offer for the complimentary review and evaluation, all you need to do is pick up the phone and give a call, 800-939-8633. Again, that number, 800-939-8633 is the number to call for the complimentary review and evaluation. Or if you'd like to find out more information about the upcoming classes, you can call that number as well as just text ASC to 555-888. So text ASC to 555-888 or give them a call at 800-939-8633. And I would like to thank you, Ralph, for taking time out of your Labor Day weekend to share your knowledge and expertise with us here on Your Game Plan for Retirement. And remember, folks, as you are enjoying, hopefully, the day off for Labor Day, remember that the biggest celebration of the worker is retirement, and you want to make sure that you are making the most out of every day you can today so that you can get the most out of every day into the future. And the financial decisions that you make are going to impact that. Ralph Grauso is here to share his knowledge and expertise to help you make sure that you are making the most of your time and your money. And if you would like that complimentary review and evaluation, give them a call, 800-939-8633. Again, 800-939-8633. And once again, Ralph Grauso, thank you for being here on Your Game Plan for Retirement.
It's my pleasure, Peter. Thank you for having me.
We'll look forward to talking with you next week on Your Game Plan for Retirement.
The content of this radio show is provided for informational purposes only and is not a solicitation or recommendation of any investment strategy. You are encouraged to seek investment, tax, or legal advice from an independent professional advisor. Any investments and/or investment strategies mentioned involve risk, including the possible loss of principal. Advisory services offered through Brookzone Capital Management, a registered investment advisor.
Ed Slott's Elite IRA Advisor Group is solely an indication that the financial advisor has attended training provided by Ed Slott and Company, passed biannual examinations on material covered at conferences and in webinars, and met other membership requirements, and does not constitute an endorsement of any kind. Ed Slott's Elite IRA Advisor Group members pay a fee for the educational programs that allow them to be included in the Ed Slott's Elite IRA Advisor Group. Membership does not guarantee investment success. Fiduciary duty extends solely to investment advisory advice and does not extend to other activities such as insurance or broker-dealer services. Advisory clients are charged a quarterly fee for assets under management, while insurance products pay a commission, which may result in a conflict of interest regarding compensation.